Hello everybody and welcome to this week's Motor Trade Radio podcast powered by eBay Motors Group. It is Saturday the 5th of November and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 59, season 8 of Motor Trade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
Well, it's bonfire night again, Curtis.
Yeah, remember the 5th of November.
There you go. So yeah, 5th of November, which actually will tie in with one of the shout-outs this week because it gives a very easy day to remember. With one of our shout-outs this week. But we have got a few shout-outs this week, haven't we? Because it's been a busy week for the sector.
We have indeed. So the first one really is for last week's interview with CAP HPI's Director of Valuations, Darren Martin. We did a standalone podcast interview with him, and Darren went into really great detail about the October trade values, the price movements. So if you haven't heard it, do catch that because he does shed a lot of light on what was actually driving the market in terms of values, and also importantly his thoughts on November.
Yeah, like you say, I mean, it was we shared a fairly long snippet on last Saturday's show, but it was on a standalone show on the Friday, so it will be in your podcast feed, no matter where you find them. But it is there, so please do. If you have not listened to it already, then please have a look out for it. And this week, Curtis and I will be meeting in person after a very, very long time down at the AM Live on the 10th of November down at the NEC. And certainly social media has been pushing of how many people are going. I think there's going to be a big catch-up down there, isn't there, Curtis?
Yeah, definitely. And we've said this before. It's just great to have live events back in the calendar again, and really looking forward to that. And it'll be good to meet up with you again after all this time because it's pre-lockdown now, isn't it?
It is. Yeah, we're not quite doing a live podcast from there. This is our part-time sort of personal activity, but maybe one day, Curtis? Maybe one day we do a live show from an event, but we'll look at that in the future.
And also this coming week is the anniversary of the Independent Motor Dealers Association, which was actually launched on the 5th of November in 2017, which is a date I remember well because I think the formal launch was at Edgbaston, which was a Motor Trader Summit event that I was heavily involved with at the time. So from those sort of humble beginnings, it's really gained momentum, hasn't it?
It has, yeah. I mean, at the start, I was quite heavily involved with the start of it, but through various reasons, with job, I've sort of not been involved for many years now. But continue to watch what the guys are doing, and whilst we're talking about the IMDA, we should get Umish and Jim back on at some stage on the podcast to sort of update us on what they've been on with. But it was always that reach of trying to get to 1,000 members. Which they're still focusing on. They're aiming to get there by the end of this year. So, considering they've only been going, as you say, Curtis, since 2017, they've still got a great following, a great sort of association there, that the work that they're doing, and those guys are down at the AM Live event as well on the 10th of November. So I'm sure we'll catch up and touch base with them there. And just before we move on to the final shout out, this week was the Fleet News 50 FN 50 Awards. So down in London, and you can obviously see the winners and the runners up of those awards. But I wanted to give a personal shout out to both Enterprise and Lease Plan, who were joint winners of the Wellbeing Award, which was a new award. Following the passing of James Davis, or JD as everybody knew him as, that was dedicated to JD by Fleet News, and that was awarded to both Enterprise and Lease Plan this week as a joint winners of that award. So well done to those guys.
Yeah, no, congratulations there. And final shout out is to regular listener David Manchester, who is a consultant at Automotive Assets. And I'm sure many listeners will know him on social media and, certainly from his days running a Peugeot group.
Mhm.
And he let us know that he's now going to be working closely as an advisor with Mike and Melanie Fazal at CarZoom, which is the subscription service that we covered, I think, probably last year when they first
Yes.
launched in the UK.
Yeah, yeah, I do catch up with Mike on a regular basis, and he's recently gone full time as part owner of the business, and they're doing a lot now. They've obviously got that base of what they're doing and got a clear strategy, and you can see why now bringing David Manchester on there to support that growth plan for Kazoom, and at some point we'll try and get them on when they've sort of come up from air of trying to launch the business and trying to get growth for the business in both the dealer and the OEM sector. So well done to David, and I know he's as you say, that Curtis is a great follower of the podcast and continuous sort of comments and shares what we push out on the podcast as well. So congratulations there to both yourself, David, and obviously great work with Kazoom.
And if, like David, you'd like to get in touch with us or come on the show or send us a press release, then just email us at motortraderadio@yahoo.com. You can also join the Motor Trade Radio LinkedIn and Facebook groups or follow us on Twitter.
So what have we got in the headlines this week, Curtis?
Okay, headlines this week come from Car Dealer, AM, Motor Trader, Motor Trade News, and the Daily Telegraph. And we'll start in a minute with October sees used car retail prices rise slightly for third month in a row. Cox Automotive revises 2023 new car market forecasts. Dubai-based AW Rostamani Group acquires 9 Westway Nissan dealerships. Electric car owners may face taxes within 3 years. Virtue completes multi-million pound takeover of family-run motorcycle business. And finally this week, Pentagon trials Sunday closing for showrooms.
Yeah, so as you say there, the first story is in car dealer, and this is, as you say, October sees used car retail prices rise for the third month in a row, and this is the report based on the latest market view from our sponsors, eBay Motors Group. So we always go into a little bit of a detail on this one, don't we, Curtis? So do you want to start off with some of the findings in the report this month?
Yeah, if we start with those pricing trends, so looking at advertised prices on motors.co.uk, they went up by 2%, which was £343 month on month to £17,154. And that's actually their highest level since May, but it's only a 0.5% rise on October last year. So the increase in prices was mainly driven by vehicles under 5 years old, and that really is starting to prompt rises across all three main car retailing sectors. So if we just look at those briefly, so franchise dealers prices, advertised prices were up 2.5% against September at 21,624. Car supermarkets up pretty much in line with that at 2.1% to an average of £18,302, while independents saw a rise of just 0.5% to £13,830. And that's probably a reflection of the older stock mix that independents would typically carry.
Yeah, and talking about stock, the slight movements on stock, interestingly, but this is actually there's showing that there's no more stock increases. We've actually got a stock decline. So where we talked with Darren the other week about there's no real stock on the horizon and demand is still kind of there relative to supply. But this month, in the month of October, the average stock level was 48.5. And that was down 8.4% from 52.9 on average of October of 2021, and down marginally from the month of September, down 1.4% from 49.2. Now, in terms of each movement, Cass Supermarket is marginally down from an average of 293 down to 286, but from an October high of 352. So you can see, the supermarkets, they're significantly down in those volume levels compared to October of last year. Marginal movements for franchise dealers down to, on average, 72 from 73 last month, but on average 86 for the same period of last year. And for independents, very little movement, actually an increase year on year from average of 33 units to 35 units, but a marginal drop from 36 units of last month. So clearly it is the supermarkets that have driven that decline from September into October.
And looking at average days to sell, they were actually pretty much unchanged month on month at 39 days, and certainly on a par with averages since June. So, and that's although nearly 6 days longer than October. So, Carl supermarkets enjoyed the quickest sales at 28 days, followed by franchise dealers at 31 days, with both enjoying month on month improvements and independents seeing a small increase from 50 to 51 days. Now, interestingly, the fastest selling cars were dominated by younger profile vehicles, no surprise there, especially those under 3 years old, with hybrids and electrics actually accounting for four of the month's best performers. So overall, the fastest selling car for the month on motors.co.uk was a Fiat 500 hybrid, averaging just 9.3 days in stock. And that was followed by the Peugeot 3008 petrol at 12.3 days and the Tesla Model 3 at 12.4 days.
Yeah, and as always, there's a lot more detail in the market view there by eBay Motors Group. So if you do head over to their website, you'll be able to find that report and drill down into some of the details. Obviously, where that's for yourself from a franchise, independent, or supermarket perspective, but gives you a lot of details around that, the price movements, be it electric or hybrid or petrol or diesel, and some of those performances, as Curtis has just highlighted there. So gives you a bit more detail of what's hot and what's not in the marketplace on age and mileage profiles, etc. So we would urge you, as always, to head over to the full report.
Next headline is from Motor Trade News, and it is Cox Automotive revises 2023 new car market forecasts. So this Phil is really based on your latest autofocus, which I know you published just
Quarter,
last week,
yeah,
didn't
yeah,
you? Yeah,
yeah, yeah,
yeah,
yeah.
yeah.
It's just come out, yeah. So
Just come out. Yeah.
we do kind of a series of media releases from the autofocus, but the details in there. But yeah, we have reforecast the 2023 volume expectation based on the current headwinds that still remain in the marketplace. Now, we are obviously seeing some pockets of recovery depending on make, model, etc. in terms of that supply, but we're not expecting now the recovery that we were expecting at the sort of the first half of the year to happen in 2023. Supporting that, we did a survey recently that did cite that most of the respondents felt that it would be at least 2024 before we get a sort of a significant recovery of supply. So we are expecting 2023 to have a marginal increase of 1.68 million ahead of our 2022 forecast, which would result in a 9.5% year on year increase. But that would still be down at 27.1% behind the average between sort of the year 2000 and 2019. So still behind pre-pandemic levels, but a marginal positive increase on where we expect this year to finish.
And I noticed there was an interesting reference to that shortage of cars in the global market, because I think last time you put out some research on this, the figure was around 31 million, but in this latest autofocus, you're suggesting that could actually grow to 40 million over the next 3 years.
Yeah, we are. I mean, this year there's prediction that we might get a global production of around the 82, 83 million. which will still be, circa 10 million behind pre-pandemic volumes. So, we're expecting now in that 3 year period to have lost nearly forty million. And don't forget, just in pure registrations for the UK, by the end of this year, we're going to be around 2 million short over a 3 year period of new
Yeah.
vehicles registered on the road in the UK alone. So, this is going to have an impact for the future, but actually, it's going to take a little bit more time than expected to recover than what we might have anticipated. Positively, though, we talk about China. Products is starting to appear from the Chinese manufacturers, which everybody's
Yeah.
talking about. So that might make up some of the surplus falls that we're seeing elsewhere.
And we've covered that on recent shows, haven't we? With some of the Chinese
Mm.
brands actually announcing which dealers that they'll be partnering with in the UK.
Yeah, so it could be that, where some manufacturers have a slow recovery in terms of volume, or some are not expecting to return to normal production volumes that they've had previously. But that shortfall could be made up by the volume expected to come out of some of these Chinese manufacturers that, as you say, Curtis, are ready to start entering the UK market.
So, next headline is from AM Online, and it is Dubai-based AW Rostamani Group acquires 9 Westway Nissan dealerships. So, this really follows on from stories that we covered probably a couple of months
Mm.
ago when the first of these sites were sold to Glyn Hopkin and Hendy. So, Westway, it was a 13-strong Nissan owned dealer group, and Nissan put it up for sale. And AW Rostanami have actually acquired the remaining 9 sites, which are across the Midlands and the North, whereas the Glyn Hopkin and Hendy acquisitions were very much around the southeast. So it's an interesting move, this, because AW Rostamani, they're a majority shareholder of Brayley, so they're kind of best known in the UK for that. Brayley's being the Honda business based in St Albans, I think it is, and Rostamani is a global player and has worked closely with Nissan across many international markets.
Yeah, and I think when we spoke last time about this story, it was kind of wondering who was going to take those
Yeah.
remaining sites, and whether it was going to be a UK business that was going to expand their sort of Nissan territory, or actually it was going to come from some of that international money into the UK. And obviously, this is certainly that international money. And as you point out there, they're not very well known in the UK because, as you said, they do operate as a major shareholder in Brayley's. And it does beg the question whether they will rebrand the Westway name, or whether they'll keep operating as Westway. I mean, it's a synonymous name in the industry for Nissan. It's got a direct association, for obvious reasons, with Nissan as an operation. So it'd be interesting if they do keep operating under that Nissan brand.
Yeah, there's no mention of it in the story. I mean, my money would be on them retaining that brand if that's part of the agreement, if they're allowed to, because that is a very strong name, and as you say, it is synonymous with Nissan.
Yeah, it would make sense. It would make a lot of
Yeah.
sense to do that, but like I say, it depends what's in the commercial contracts of whether it can be or not. But certainly, I think it's a great move. It's a great, obviously, for the employees of those businesses as well, that those 9 sites have been acquired, and it looks like that these guys do invest and look for further growth. So there's potential more coming from these guys.
You're listening to All the Chat at the Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. So,
So
next headline is from the Daily Telegraph, and it is electric car owners may face tax hikes within 3 years. So, this is this story kind of speculates around what may or may not be announced in the autumn statement on the 17th of November. And as if Jeremy Hunt hasn't got enough on his plate, it looks though he may be looking at the treatment of excise duty, vehicle excise duty on electric vehicles.
I think, yeah, and I've got the story up from This Is Money, which is a little bit more brief and headline grabbing, should we say, Curtis, than the Telegraph. But you're right. I mean, it's been speculated for some time is how is the Treasury going to recover revenues from the loss that's been leaked from petrol and diesel taxation and the growth of electric vehicles in the marketplace, and how are they going to do that? And we know that at the minute there's a lot of stuff around electric vehicles because of the cost, the energy cost, and public charging increases. Now, some people saying that it's as expensive to run an electric vehicle on public charging as it is to run a equivalent petrol or diesel because of that cost per kilowatt. But clearly, it's how long can the government go on, the Treasury go on, without creating some kind of taxation revenue from electric vehicles? And that's always been speculated, hasn't it? So, Jeremy Hunt's he's got a hard one here, hasn't he? Walking in
Yeah.
and going against the road to zero and the automotive EV sector.
Yeah, and there's a figure quoted in the Telegraph story that MPs had warned that the £35 billion annual revenue from both VED and fuel duty is set to fall to zero by
Mm.
2040. So that is focusing minds in the Treasury. And I think there was a pledge that the EVs would be VD neutral until at least 2025. So I think we're talking about the 2025 to 26 financial year, tax year, as the first opportunity to start taxing these vehicles.
Yeah, it's going to. I need to say, we've had a call this week around expectations from what's going to be announced on the 17th of November. Clearly, the current administration at number 10 is looking at tax rises. It's just where that revenue is going to come from and where the pain is going to be felt. And unfortunately, it is majority of the time on the motorists in the UK, isn't it? And if EVs are the dominant growth area, then potentially that's where it's going to come from. But it is at the minute, as you said, a lot of speculation around this. But clearly, there is something there in that they're going to have to do something and are going to do something around that taxation of EVs.
Yeah, we will know in a couple of weeks' time.
It's a big black hole to fill at 35 billion a year. Bearing in mind how long that's been falling for and what the deficit is. But then again, we did talk last week, didn't we, on the podcast about a 1.2 trillion investment in electric vehicles over the coming years from the automotive sector. So we are talking big numbers, aren't we?
Well, we might as well throw the other big number into the mix, and that was the $44 billion that Elon Musk paid for
There
Twitter.
is that, yeah. And his kitchen sink or whatever that was, yeah.
Yes.
Yeah. It's, who's going to be paying that money back? But talking about investment and talking about money, we are moving over to car dealer. And our very good friend of the show, Robert Forrester, announces that Virtue completes multi-million-pound takeover of family-run motorcycle business. And this is Virtue expanding its partnership with both BMW Group with the purchase of Alan Jeffrey's business. And this is a great move, particularly in that motorcycle area for Virtue with sites in both Shipley and Rotherham.
Yeah, this is actually a really good move. As you say, there's two sites there. Alan Jeffreys, the business, it's been going for
Oh
four
yeah,
generations,
yeah,
dating back to 1901. So, phenomenal track record there. And the group actually first represented BMW in 1971. So this latest deal makes Virtue actually the largest BMW Motorrad motorcycle retailer in the UK. And I think from a strategic point of view, this is actually really interesting because it now gives Virtue a motorcycle division, which it's calling the Virtue Motorcycles division,
yeah.
because it already operates Motorrad. And of course, it has Honda as well. So it does have a good standalone business unit now.
Yeah, it's kind of another great move from the Virtue team there as they sort of look to expand and diversify their portfolio of business representation. And that I think sometimes we underestimate the opportunities sat within that motorcycle sector. It is a very, very big revenue earning sector, particularly when you start thinking about all the accessories and peripheral add-ons around motorbikes. That's where there's some real core money involved with that sector as well. So again, like you say, great move now there with and moving into that. And if they do go down that line of that motorcycle division, I don't know, I suppose reading between the lines, don't expect them to stop there with just Motorrad and Honda, I suspect. And
Yeah,
I think if they're going to create a division, then I'd anticipate further growth, wouldn't you?
yeah, and there's an interesting comment here about because of the seasonality of motorcycle sales. Virtue actually expects the acquisitions to make a small loss between now and the end of
Hmm.
the current financial year. But Robert Forrester goes on to say our business is performing strongly, and the addition of two further BMW Motorrad outlets will be accretive both financially and strategically to the group. Virtue becomes the largest partner for the Motorrad in the UK. So, a good strategic move there.
Definitely, definitely. And then final story, and again, it's a good friend of the show and a good friend of yourself, Curtis, isn't it? With David
Yep.
Peel,
Yes.
who is the managing director of Pentagon Group, and this is the Pentagon trials Sunday closing for showrooms. Now, we know that some independent, smaller operators do close on a Sunday. It's been trialed on and off over the decades, and but this is really a group the size of Pentagon. This is a significant statement in terms of that work life balance and consumer behaviour changes of deciding to close on Sunday.
Yeah, definitely. And they actually took to social media to announce it. I first saw it on LinkedIn early in the week last week, and it said that it had been prompted by a recent employee survey where the feedback highlighted that staff wanted a better work-life balance, which is something that I know we talk a lot about
Mm.
on the show, and certainly with Stephen Witten, our wellness guru. So as a result of this, it is implementing this temporary change to explore how it will actually work for staff and customers. So it's dipping its toes in the water, but as you say, it is a big group doing it because we have reported on other groups.
Yeah.
I mean, in recent months, there's been, I think, Burroughs Motor Group did it, Allen Motor Group, and I think Peter Vardy as a group closes on Sunday as well. So
Yes.
there are precedents for this, but Pentagon's possibly the biggest group because this will actually be over 30 sites.
Yeah, and interestingly, there is a point in there that with the current cost of living challenges and energy costs that are taking place, that actually it'll be interesting what the result will be by closing the sites on a Sunday, giving that work life balance to the employees and colleagues within the business, but actually at the same time the cost saving from closing on a Sunday. And I suppose the big question is, if somebody wants to buy a car from Pentagon just because they're closing on Sunday, does that mean they will not buy a car? I don't see why not. They'll just buy a different way or a different route. And I suspect, the website will still be operating. You'll still be able to click and reserve vehicles via the website anyway. It's just that face-to-face environment that won't be available on a Sunday. So potentially a good exercise this, and we'll have to try and get David Peel on at some point in the future, either to talk about the move or actually talk about what impact it's had on the business by making the move.
Yeah, and just to clarify, live chat and call center contact will still be operational on Sunday. So customers can still get in touch with the group. And there was an interesting point in this story made by David Pearl. He says that we have been aided in our planning by a changing pattern in customer behaviours. Our own experience parallels recent findings of industry-wide surveys that show the number of people shopping seriously for cars on a Sunday is now down to around just 8% of the weekly total. So I wonder how many listeners would agree with that if they're seeing that as well. And certainly one of the sort of anecdotal pieces that I read around this was that because there's more people working from home,
Hmm.
they're actually more available during the week, presumably during their lunch hours or whatever.
Carefully said it.
Yeah,
Yeah. You're trying to say people are going to buy cars and look at cars when they're meant to be working, Curtis.
yeah,
Okay.
yeah, but I think that I think that could be a trend.
No, I think you're right. I think there's that kind of trend has been there for. I mean, the dominance and kind of even when I was back in the trade running in sites that over the time the dominance of that weekend business started to ease off. There was as much business done on a Monday as there was on the Sunday. The weekend tended to be done a bit more for research and activity and things like this. And actually, the working week was where they did the deals. But you're right. I think it is a potential change in both buyer behaviours and working behaviours. I mean,
Yeah.
it is more flexible. But as you say, key with this is that David has made the point that call centre and everything else in the digital space is still available. The 7 days a week. It is just the showrooms that will be closing. But David, if you are listening, then please do get in touch and tell us all about it. And that's it, isn't it, Curtis? I mean, covered a lot there. We'll see which way taxation goes on electric vehicles. Some big numbers there. We'll at some point see what happens with the Westway dealership group. But best thing about that is it's now 7 franchise dealerships now know that they're under new ownership, and these owners do invest over there from Dubai. So lots still going on in the sector.
But that's all for now. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chat that matters. We're back with the headlines next week, including October's new car registrations. Until then, it's goodbye from me.
And it's goodbye from him.